Hello again, everyone. Welcome back. In this technical analysis of the stock market video, we're going to drill in to take a look at the S&P 500 today and its ETF, the SPY, and then take a look at a couple of indicators and see what's happening underneath the covers a little bit here. But starting off, we're going to look at the side-by-side view, the Dow Industrials, the S&P 500, and the NASDAQ 100. This last week, the Dow was down 268 points, but it was a little inside, slightly down type candle in here. The divergence continues. The bearish divergence that's showing up in here continues, especially on the RSI. We see it on a couple of the others, not quite as dramatic on DI plus, but DI minus is showing it. When you come over here and look at it on the S&P 500, it's pretty pronounced also. And a couple of weeks ago, the video I did before Thanksgiving, I talked about a correction coming soon. And, the underpinnings in here, there's definitely weakness. And I'll talk about that a little bit in the S&P 500. But the bottom line is you got to get the price to break down. And it hasn't done it. It's continued to trend higher in here ever so slightly. Here's the last 3 weeks on the S&P 500. And yeah, it's continued to push a little bit. But, you got still have the bearish divergence showing up, and we'll see how long this is going to continue. I know everybody's going to sit back and maybe this time is different. I've got my doubts. We'll see. The S&P was up 57.89 this last week. The NASDAQ 100 up 692 points. This was a big surge. So this thing, the Qs have finally caught up with the SPY again, and have edged slightly ahead of them on the year. For quite a while here, the last few months, the SPY has outperformed the Qs, but now all of a sudden here this last week, we got this surge. We'll see if that's is that a bull trap, or is there going to be some continuance going on in here, because we're still seeing bearish divergence showing up. Let's take a look at the S&P 500. So here's that SPX weekly we just looked at. Here's the daily on Friday, up 15.16. So, it just kind of tightening up in here. We're definitely above the Kellner channels. We're getting extended. We're above the 70 level, getting overbought here on the RSI. And sometimes when you get a real strong overbought reading, it can just sit there and stay overbought and trend and trend and trend. Well, it didn't do it last time. And I'm really suspicious about it happening this time because of several things that we're looking at. Let me take a look at the SPY. Let me pull that up. And I'm going to look at the daily here. And the thing that really jumps out at me on the daily, we got the same picture on the indicators as on the SPX naturally. But when you look at the volume here on the SPY, okay, the red line is a 20-day average of the volume, okay? And for the last 10 days, each day has been either slightly below or dramatically below the 20-day average of volume. And so we're talking about from here. Here is, what is this date? This is November 21st, okay? So from November 21st on in, this last push up in here, the volume has really been dropping off. Now, I know we had the Thanksgiving holiday in here for a day or two, but 10 days is a pretty dramatic show of a lack of commitment into the price action of what this is doing in terms of pushing higher. So let me take a quick look here at the Elliott wave picture. So here's what I've got. And let me just show you on the weekly. Okay, so we've got the big move down that happened into the October of 22. Okay, since October of 22, we've had a pretty good rally going on. And here's how I'm counting it. 1, 2, a big third wave to the upside. And I'm counting this as a sharp fourth pullback in here. We had a messy sideways wave 2 back over here. So the alternation fits in terms of the Elliott wave counting. And then when you take a look at the fifth minor wave in here, here's that volume drop off again, and look at the divergence that's showing up. We got pretty dramatic divergence at the tail end between 3 and 5 of the third minor wave. And then we got a nice hard sell-off here for, what was it, 3 weeks, 4 weeks, I guess, if you go all the way to the low, back to August 4th. That was the week of August 4th, you remember that. And then that was the whole fiasco with the yen and everything. And then the push that we've had since then, pretty weak. Volume and, RSI readings in here. Now, so what am I looking for? I'm looking for a corrective move that most likely, because this was a sharp pullback, ABC zigzag, this could be messy and chop sideways. So you never really know what you're going to get for a fourth wave like this. But this is due. I mean, we've had, what has this been? 2 years? Over a 2-year rally, okay, that's going on. Now, just because it's been 2 years doesn't mean it has to end, but we're starting to get the signals in here on the price action. So that's why we're watching this pretty closely to see what it's going to do. And so when I look at this last fifth wave, this is the way I'm counting it. Now, it's not picture perfect, but it fits. I mean, we had a sharp pullback initially, very quickly for a wave 2. We just had a lot of overlap in here that I think was pretty puzzling for quite a while, but I think this is what's going on right now. And then this last leg up in here, either it ended at the high on Friday or it's very close to ending. Okay, so right now I've got it sitting where it ends at the high that occurred on Friday. Okay, so that's the SPY. Let's take a look at a couple of our indicators. So again, maybe it's different this time, but I got my doubts. Okay, so let's take a look at the VIX. Now look at what the VIX is doing. Let me go to this. This is the setup I like to look at here. The red line at the 20 level, whenever it gets above 20, everybody focuses on the fact that it's really getting elevated and a sign of volatility kicking in. We're very, very low right now, sitting at 12.77. We're back into the range of where it happened earlier this year. I mean, if you look at this cluster of readings, this was all this year. Okay, so we're back down into that, category of no fear in the market right now. And we'll see. It started to turn back over here in mid-November and then just failed and flipped back down to the downside. So we'll keep an eye on this. The other a couple of them I watch several. I watch quite a few actually. But this one, the percent of stocks in the S&P 500 that are above their 50-day moving average, this has been dropping off pretty rapidly now. I think if we break this trend line, I think it's going to be a sign that it's going to be heading south below the 50-50 level. And a pretty good sign of weakness has been down 5 days in a row. And when you take a look at the percent of stocks above their 200-day moving average, it also has been declining the last 4 days and not showing nearly as dramatic a move, but it looks like we're now starting to get some weakness kicking in here. We're sitting at 69.3% of the stocks above their 200-day moving average. So you can see when we go back here over the year, see how we've just been bouncing around sideways here on this indicator for almost the entire year. Okay, that is it for today. Let me go back and just leave you with the SPY, leave you with that picture. We'll see what happens. Everyone, if you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. And if you'd like more of this information, head on over to joehenches.net. Everyone, have a great week. We'll talk to you on the next video.